Welcome, G3 investors and patrons. And we're going to take a look at February. So the market sold off. So the question is this a pullback or a correction? So here we got our megaphone chart of the NASDAQ Composite Index, and we can see that we had quite a pullback here. This pullback from peak to trough was 8.3%, and that compares to the 5.4% pullback we had in January. So let's take a look at a daily chart for 6 months here, and we can see the blue line represents the all-time high that the NASDAQ made here on the 16th, and then the pullback that we see here, and we pulled back, started to go back up. This looks like a reversing combination here, but it failed on Thursday and Friday. So here we are, and we're right below this red line here, which is the 50-day simple moving average. So if we confirm that by staying under there, I'm going to call this a correction. And correction can be 8 to 15%. Pullbacks can be 5 to 10%. So there's a little confusion there. So it looks to me like the NASDAQ is definitely in correction territory. And so if we look at what we trade, which is the QQQ, which is the NASDAQ 100, it looks very similar. Very, very similar. So we've blown through this blue line, which is the 20-day, and we're living below, for at least for 2 days here, the 50-day simple moving average. Now, if we keep staying below that and we go below this support here, we've definitely entered correction territory. Did we get confirmation? Well, let's look at the SPY. See, and now, to me, that looks more like a pullback because we didn't close and stay below the 50-day here on the S&P 500. So to me, that looks like a pullback. And this from peak to trough here is only like 4.1% compared to 8.3 for the NASDAQ. So if we look at the Russell index, again, from peak to trough, this is a 6.6% correction, but we're just barely below, and that's because the Russell has been the strongest index from this November 4th when we took off, and this uptrend started back on November 4th of 2020. So this is really just a pullback. So you can't go by percentages, and you really can't go. So we're kind of in between a pullback and a correction. I know that doesn't answer the question, but that's just the way it is. So if we look at the diamonds, which would be the Dow, we can see the same thing. We've pulled back. It's been a shallow pullback of 3.4%, but we're still above the even though we tested the 50-day, the red line here, we're still below it, or above it here, I'm sorry. So again, no pullback, or no correction, simply a pullback. So I'm going to call this a pullback until we get more confirmation. So we may get that next week and we may not. But at any rate, what I look for in a pullback or a correction is, confirmation, or hey, is this just are they gonna buy this little pullback here and go higher? So let's look for strength in the market. So where is the strength? Well, the strongest ETFs are XLF, which is the financial sector is very strong. And even though it's got a pullback here, and I haven't calculated the percentage, but it's not even close to its 20-day EMA. And these are guides. I don't trade from these, but they're just indicators of what's going on. You can see how strong this 20-day, once it broke above the 50-day here, where we had this long area of convergence or consolidation, and we broke above that and we just went to town. Here was the January pullback, and this is the February pullback. For the XLF, the January pullback was much stronger than it is right here. So there is strength in the financial sector. The other big sector that's pretty strong is energy. Again, energy wasn't quite as strong. If you look at when this crossover occurred, it still kind of went sideways here, but then it made a definitive break to the higher, made some good money on this move, but it pulled back, and to me that looks like it wants to go higher instead of lower. So I would say energy and financials are where some of the strength of is. Let's look at the industrials. Again, not as strong, but pretty strong breakout here, and this pullback has been, if you want to even call it that, is it pulled back into this consolidation box here, if you will, but that's about as far as she went. So again, I would call this not even a pullback, and to me it looks like we could be headed higher for the industrials. Now, last week, and this continued this week, there was rotation. There was market rotation where we rotated out of technology, and I'll get to that in just a minute. I want to look at one other area that's holding up well, and that is the transports. Again, not a strong move here. It's been up and down. Here was this was definitely a correction here, or a sideways consolidation, if you will, and now here we got a minor pullback. So again, of the 4 ETFs of the 20-some that we follow, these 4 are definitely the strongest ETFs out there. And that sector, if you will, is what I call the bricks and mortar, or industrial financial complex. And if you look at what's really been weak, it has been technology. So let's look at the weakness for a minute. And there we've got here we had a minor pullback in January on technology. Broke out real strong, but this has been a pretty strong pullback. And again, here we're starting to live below that 50-day moving average. And so old support here at this green line at 128 is not very far away, just a couple points away. So this could easily go this way. That doesn't mean the market's going to. I don't think the market's still made up its mind one way or the other. But we had a great week, and I'll show you our results here just real quick, and then I'll get back to my analysis. But we were lagging this month. We were lagging our benchmark index, but this week, right after this week, here we're up 6.8% versus 2.6% for the S&P 500, and that makes us 4.2% better. The NASDAQ, because of its strong pullback, okay, we beat it by 5.8%. And of course, year to date, we're crushing the market like we always do. We're consistent on that. Hey, if you like this video, it's time to like, share, and subscribe on YouTube. Like, share, or dislike, or whatever. And if you really like what I do, you can sign up for and become a patron by just copying this link into your browser and signing up. Okay, let's get back to our analysis here. XLY. Oops. Got to be on the money there. XLY is the consumer discretionary sector, and this pulled back hard. Again, we had a pretty strong pullback here to the 50-day, and then boom. Hey, we're quite a ways below, and we're only a few points away from support, the initial support. So that's not looking good. XLV looks pretty weak to me. IBB, IBB is a subsector of healthcare. It's usually a better mover, and we've made more money there, but again, that's a pretty strong pullback. And of course, gold, silver, miners. I'll just look at one of them. Let's just look at GLD. Very weak. Very weak sector there. Okay. Now, there's some that SMH. Let's look at semiconductors. It's kind of, it's still in pullback mode, so it's kind of in between. It's not really strong, but it's not really weak as those other sectors were either. ITA, here's another weak one, weak sister. Well, it looks like it to me, even though it's right there. That's close to. I don't know. Let me look at IWF, which is the Russell 1000. Yeah, that's looking pretty weak. Whereas when you look at the Russell 2000, a little broader index, it's not looking weak at all. But the growth, so we've went out of growth and into the bricks and mortar, or the more conservative. The market has definitely got more conservative on us here. I really would like to look at materials. Again, that's right in there, right at the consolidation, so it's pretty weak looking to me. Housing, also an important sector, not quite as weak there. We're right there. We're just about ready to cross over into correction mode, but we haven't yet, so that's kind of a in-betweener. IJK is the mid-cap 400 growth. Again, a little, not quite back there, so kind of in between. And the last one, IJT, same thing, pulled back in, but it's right in between, so not quite there. Okay, let's take one last look at our heat map here. This is a 1 week look at the exchange traded funds, so we can show how we made our money. And you can see the technology sector is really red, healthcare red. There's the big mover, energy, and financials held up well. The banking, we don't trade CRE, but that's the banking. And then there's the industrials. And then there's where we made our money, by shorting the market this week. SQQ, SDS, and TWX. It doesn't show up on this one, but it's in there. So that's where we made our money. There's GDX and SMH, and quite a bit of pullback everywhere. Okay, let's look at the S&P 500. This is a 1 week performance of the S&P 500. Let's see if I can get a better view of this here. So we can see what stocks pulled back this past week. And you can see the technology sector, other than Oracle and a few other smaller ones, it's hit pretty hard. Communication services, consumer cyclicals, Tesla and Amazon, Home Depot, Walmart. Again, financial services and the banks kind of held up pretty good. Over here's the energy sector. It's looking pretty good. So it shows what happened during the last week and how this pullback occurred. And if we were to look at a 1 month performance, you can see this. I'm going to get this better. You can see the big culprit was Apple and Tesla and Amazon. A little bit of Facebook there, Home Depot, Walmart. The banks and the financial services, credit services really held up really nicely. And so did oil, gas, and energy. So the question is, where do we go from here? We don't really know. The market could just go up from here. I mean, if we follow what has happened in the past here recently, they'll buy up this market sometime in March. But we could correct more. Anyway, we will follow it and go with the flow. This is Greg Gallagher with G3 Investors. Good trading and good luck.